CKGSB, China's only not-for-profit independent business school.
Given where the Chinese economy is in terms of its cost structure, the value of its currency, and so on, a sustainable rate of growth for China is more like 5%, 5.5%. The challenge comes if the country is not willing to accept that the days of 10 are gone for good, that in fact even the days of 7 are gone for good. If the country can really accept that, then the leadership would not be, let's say, feel the pressure to put in place policies to somehow force feed the growth to be higher. At the micro level, if I look at different industry sectors, I think anything and everything which has to do with construction, be that steel or cement or construction machinery, that sector is not only mature, but right now suffers from massive, serious overcapacity. And I don't see how that sector is going to get out of trouble anytime soon. Another sector that has been very robust and a major contribution to economic growth in China is automotive. Forget about 30% growth rate that took place from 2000 to 2010. That the days of double-digit growth in the automotive sector are gone for good. That in fact, one should expect, at best, a low single digits growth rate. The brutality of competition in the auto sector can be expected to become much worse. And so I would not be in any way sanguine about the profit margins for auto companies in China, whether it's at the luxury level or at the mass market level. On the financial sector side, China has been opening up and embracing the market. However, what has taken place, the events of the last, say, 2 months, 3 months, maybe at the most, one could say a year, they trouble me. And they trouble me because in terms of the opening up of the financial sector and greater integration of the Chinese financial sector with the global, international financial sector, while that has been going on, and that's a good thing, is that the government, if you look at the stock market, for example, that the government has seriously gotten into the act of intervening in capital markets, both in terms of, in a way, cheerleading the formation of a bubble. And then, when the bubble bursts, to let it, let's say, find its own new normal, to intervene to prevent it from finding the new normal. And so what that has done is really, in a way, creates a scare among the minds of people such as myself, is the government ready to embrace the market? And does the government get cold feet when the market begins to do its own thing? So there is this schizophrenia, perhaps is the right word, let's say a belief that in the financial sector, the country needs to move towards a stronger market orientation, but at the same time, when it begins to do that, a fear of losing control.